Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. In this webinar, I will be sharing with you how you can benefit from Fibonacci, what Fibonacci all about, what separates from Fibonacci from indicators, and how you can trade Fibonacci. At the end of the webinar, I will be answering the questions of the instruments of your choice. But first remember, always and forever, never ever trade with risks you cannot afford, and everything I do for education purposes. So how in the world did I started working with Fibonacci? Collapse of 2008 changed everything. In the world of finance, collapse of 2008 made me question everything about markets. Until 2008, I was investing stocks strictly on fundamentals. Until 2008, I had a very naive view of the markets, being very accomplished investor in the stock and real estate market. In 2008, stocks with stunning fundamentals were collapsing completely. In 2008, this is a stock I was invested in. This is a stock that had stunning earnings, stunning fundamentals, stunning PE ratios. In 2008, Chesapeake Energy was flawless. In 2008, however, Chesapeake Energy was crushing with nothing stopping it, while Kramer, while CNBC, while all the news were saying, stay through any market corrections. Good thing I did not listen. Good thing I started questioning everything about the markets, and I understood completely clearly that there is a lot more to the story. I understood extremely clearly that if fundamentals, earnings, and indicators worked, everyone would have been Bill Gates. I started seeing that market is flawless Fibonacci puzzle. In 2008, I developed very first strategy that remains the core of the course. I started seeing extremely clearly that price keeps repeating exact same patterns time and time again, no matter what instrument, no matter what time frame you trade. This is what I teach every day in the course. If you can master this, why would that matter what you trade? This is price traders. This is in front of you S&P. If I just remove the name from this chart, you will see extremely clearly. It doesn't matter what this is, because if you learn how to trade price action, it would not matter what's in front of you. What instrument is this? Why would that matter? Price action remains exactly the same everywhere. Let's do a quiz. What instrument is this? No one knows. Doesn't matter. Doesn't matter if it's euro. Doesn't matter if it's Apple. Doesn't matter if it's S&P. Doesn't matter if it's oil. You master the price. You apply Fibonacci. You can trade any instrument, any time frame, as long as you play by the rules. This is not S&P, but it looks exactly the same. This is in fact Apple Daily. This is the core to the market, and this is what you must know in order to trade successfully. Every single level I will show you throughout the webinar is a level that has extremely high accuracy. This is a chart from our day trading room. This is a market that's been in a play in our day trading room that will reopen on May 8th. In the day trading room, I demonstrate the accuracy of the method. Every single level has extremely crucial significance. When you see market comes to reversal zone, price reverses. This is the levels that had been present in our chart since the start of the month. This is the levels that been in a play on S&P since the start of April. Fibonacci identified these levels far in advance. Every single time price comes to reversal zone, no matter what the news event is, you cannot short into. Rules are met, you take long. Hot pink line is the end of the minor trend, crucial institutional resistance, as we witnessed today in a play on oil at the time of oil news. And this is what price does each and every day. Market is flawless Fibonacci puzzle. No indicator will give you these levels far in advance, as these levels remained in a play this entire month. No software, no indicators of any kind. Price for entry and Fibonacci for exits. Rules remain exactly the same on any instrument and any time frame. So what is Fibonacci? What separates Fibonacci from indicators? Fibonacci is a mathematical sequence that was discovered by Leonardo Pisano in 13th century. This mathematical sequence is what creates repetitive spirals, triangles that are present in nature and also present in the market. This is the only predictive mathematical sequence that forms the markets. Market is not chaos. Price action is what forms Fibonacci waves that are tradable within any markets. Fibonacci is what creating repetitive price patterns. So how is it calculated and what is Fibonacci sequence? Fibonacci sequence starts from number 0. If you add 0 and 1, this is where a spiral starts. As you will see next, it's all about the start of the trend. 0 and 1 create subsequent number, 1. If you start adding the numbers, this is a spiral of the market. This is the numbers that matter. This is the numbers that should be traded. Non-Fibonacci numbers have no significance in the markets. And this is what price does on any instrument, any time frame, showing you every day that Fibonacci is the only naturally predictive sequence, while every single indicator developed on price action after the fact. Fibonacci is the only mathematical sequence. Indicators artificial formed. Fibonacci can be used on any platform, any instrument, any time frame. If you ever discovered indicators that works, it works only on that particular platform, only on that specific time frame. And every time you use indicator, every time you have to pay the fee, it's only on that particular platform and that particular instrument. When in fact, here's a couple of examples. Here's long-term charts that have been present in the trading room for the last 6 years. Here is S&P monthly chart. Been present in the trading room since the start of the website, 2011. This hot pink line is the end of the minor trend. When bearish correction played out, that I will be dissecting in this Friday Fibonacci class, as knowledgeable trader knows extremely well. This was the key to that correction. This is the most crucial support that's ever present. No matter if you trade Apple hourly, no matter if you trade Euro monthly, this level is always present. I will show you where Euro is now. This is a bullish rally. This is a chart that's been in the trading room 6 years. That's currently at reversal zone. This is why market in massive bearish correction now, month number 3. Bullish rally is taking a pause. We also dealt with massive bearish correction in 2014 when crucial Fibonacci support was respected, when buyers stepped in with vengeance in 2016. And if you remember the power of this support on S&P, do not forget what's currently in a play on gold. Does this look familiar? Weekly chart. Bullish rally on gold. Hedge fund managers who are taking exact same course alongside of beginner traders acquiring position at this support. His testimony posted on the website. Bullish rally reached this crucial Fibonacci resistance and reminded you, as long as end of minor trend is respected, bullish rally will go on. Gold currently at reversal zone, where gold collapsed from in 2016. If you know these levels years, months and weeks in advance, you know exactly where to take the profits of the table. And that's exactly what I demonstrate in day trading room. You don't have to wait for weeks and months, as price action remains the same, and that's what we dealt with in a trading room this week. As I continue warning you, entering trade into this Fibonacci resistance, not an option. Identical formula, as market gave you massive fake out this morning at the open. Knowledgeable trader buys at reversal zone, not here. And that's what in a play each and every day. Formula remains the same. Risk management, how long trader holding the position, is it a couple of minutes, is it hours, is it days, is it weeks, depends on trader. Every single trader has different circumstances, different account size. Formula remains the same. Fibonacci remains the same. The only predictive tool in the market, not a delayed indicator. Indicators show you how the market behaved after the fact. Indicator will not tell you minutes, hours, days and weeks and months in advance where price will reverse. This is what we've been dealing in the trading room today during oil news. Do you remember last week's spectacular bullish news, oil traders? Do you remember this? Browse blog, website and YouTube channel and see what's been happening on oil when you had spectacular bullish news. I will show you later on where you can find video. When we had stunning bullish news last week, and all I could say, who cares? If news meant a thing, everyone would have been Bill Gates. If indicators worked, everyone would have been printing money. The only thing that's constant in life, knowledge is power. The only thing that matters is price action. And if you're not liking your vision, if you spend years studying this, you may develop your own method. If you don't have years to study with, this is what I share and this is what I teach daily. That market is flawless Fibonacci puzzle. Remove the indicators and start with this. This is a chart of the student who invested over 400K into indicators. Students coming to the course after trying for 20 plus years, becoming extremely well versed in indicators, not in knowledge of the markets. When in fact, Fibonacci is highly accurate key concept for profit targets, which is absolutely crucial in day trading targets and long-term investment position exits. Only tool that will give you these levels far in advance. This tool that you see in front of you on any instrument, this tool that I would like to remind you where EUR collapsed from at Fibonacci reversal zone at 3800 can be installed on any platform of your choice. Exact same tool can be installed on MT4. I've never seen a platform that doesn't have Fibonacci tool. However, Fibonacci tool can only be used if you know the rules, if you obey this formula. Price action for entry and Fibonacci for exits. Fixed stops and speculative entries do not work. Price shows you where entry and stop should be. Fibonacci retracement show you where accurate targets will be. Never block your vision with indicators. Pay attention to pure price. And this is a principle I teach every day. This is a key and this is a core. Market moves in 5-wave structure when trend is major. Knowledgeable trader acquires position at trend inception, wave 1. Knowledgeable trader never ever shorts near wave 1. This is exactly what's been happening on S&P. Looks familiar? Spectacular collapse, finding very powerful reversals. Short, not an option, especially when institutional support is present. Have you seen very powerful bullish rally and suddenly market reversing? That's because you are dealing with Fibonacci resistance. This is the end of the minor trend. Never enter into. This level is always present. This is what you start with. You never trade wave 2. If you do, you're a very aggressive counter-trend trader. Your last chance to acquire the position at the inception of wave 3. Wave 3 is always present. If you choose to short wave 4, your success rate will drop significantly. Shorting the market against a major trend, not a good idea. As S&P had been reminding you that very clearly, as a trend we've been witnessing in the market since the start of 2016 had been the most powerful bullish rally we had not seen even in 2009. This is a chart that's present in the room for years. This is reversal zone, institutional support. If you're a day trader, you must respect what institutions do. This is where buyers stepped in from with vengeance at this reversal zone multiple times. 2014, 2015, and finally with vengeance 2016. Remember the hot pink resistance on S&P hourly? As you can browse videos on the website, as you will receive newsletter, and I will show you where you can find the videos that showing you instantly the significance of this level. This is where S&P struggled for many months before it broke through this level. This is a level that remained a major obstacle in day trading room this week. Identical formula. This is a level that's currently in a play on euro. As I said in 2015, this is ultimate Fibonacci support on monthly. This is your level 1. If euro is breaking through 1, euro goes into free fall. This was crucial Fibonacci support on euro weekly, 3400 number. Do you remember that level? Euro was stuck at that level for a couple of months. Once that support is out, euro went into free fall. No one ever thought euro would break through 3400. Really? Does anyone think euro can break through 1? Did anyone know anything about Brexit and suspected that pound would break through this hot pink support a whole lot faster than euro because of Brexit? Do you remember where pound is now? Pound already blasted through this level. Pound already in free fall. Pound already reached well past 2400. Remember that? That's pound. Identical formula as you're witnessing each and every day on S&P. And that remains the key. As I said years in advance. Pound and euro in free fall. Bullish rally on dollar simply taking a pause. And that remains constant. Identical strategies, identical levels. Doing this each and every day of your life. This formula, no matter what instrument you trade, market is that simple. Trade wave 1, trade wave 3, do not touch 2 and 4. Doesn't matter if it's Apple, if it's S&P, if it's oil, if it's pound, if it's gold, if it's Tesla. This is a dance that oil been doing on institutional chart present in the trading room the last 2 years. This is the end of the minor trend, famous 55 number. Never buy near. Identical level where euros sitting the last 2 years. Remember oil in 2016? Remember the reversal zone? Trend inception entry? Do not buy at the end of wave 5. Will not work. Do you think you're buying spectacular bullish rally? Ouch! Not an option. Identical formula to S&P. In day trading, you're witnessing instantly in live markets. And that's a formula that remains constant. Trade 1, trade 3, not 2 and 4. Never be tempted to acquire position at the end of wave 3. And that's all that matters. That's a market formula. If trend is minor, market moves in 3-wave formations. If trend is major, market moves in 5. And that's a dance price repeats every time. And if you just remove indicators, you will see it very, very quickly. Never cease to amaze me when I work with beginner traders, how instantly they grasp the concept. There is nothing more to the market. Market is that pure and that simple. Price comes to reversal zone. That's your trend inception entry. Apply Fibonacci levels. Take a trade. Never ever ever be tempted to short near. Never ever 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 be tempted to acquire position into end of major trend. It's a brick wall. Respect the rules. In this short webinar, I'm teaching you basic rules. This is what I teach in day 1. And this remains the core of the markets. Key details remain and apply. Nasdaq, exact same formula, daily. All the same. Euro, spectacular bullish rally did not mean a thing when it came to Fibonacci reversal zone. Nowhere to exit. Never be tempted to acquire near. Each and every time. Did it matter that Tesla came out with announcement that it succeeded market cap in Ford and GM? Oh, did you see a pullback on Tesla? Are you having a heart attack, or do you understand that Tesla in massive bearish correction? News does not mean a thing. Last chance to acquire position on Tesla was at this key Fibonacci support. At last chance to enter wave 3 here. Never acquire position at reversal zone. It will not work. Bullish news does not mean a thing. You know the rules? You know that this is extremely important level on Tesla. And that's a formula that remains constant. And I love how Apple reminded everyone what I was sharing at hedge fund presentation in the last 2 years. Remember Apple at hot pink support? Horrific earnings in 13 years. And I said it does not matter. Fibonacci support respected, rules are met, take a trade. Do you remember Apple at reversal zone in 2015 when Apple had stunning earnings? Did not matter. Apple collapsed 40%. Are you having a heart attack right now because Apple is at reversal zone? Does it really matter what earnings on Apple are? Wouldn't everyone be Bill Gates if it meant a thing? It doesn't. Apple already retraced about 5%. Ouch. No surprise. None. What is the key support on Apple? It's this one, exact same level as you're witnessing on Tesla. Just remember what Euro did at 38. Just remember what Pound did at 2100. And that's how market testing you for the rules. Remember the end of the minor trend on Pound at 194? When that level was out, Pound went into free fall. And that remains a core on every single instrument, chart present in the room for years. Market is flawless Fibonacci puzzle. No matter what you trade. You understand price action, you apply Fibonacci, you can trade oil, you can trade S&P, you can trade Google. Risk management and time you hold the position is the only difference. This is as clean and as flawless market will ever be, as you can see on Google. Flawless market structure. If you're looking at this and you do not know what this is, you have a lot of work to do. Clear on that? This is flawless. This is pure. This is as easy market will ever be. And that's why it never ceased to amaze me when I work with beginner traders, how instantly they grasp this. Because at the end of the day, one thing is constant. Psychology, 80% of what you do. Knowledge is everything. Since 2011, I worked with thousands of traders, from beginner to hedge fund trader. Traders who trade anything and everything, from S&P to ETFs to stocks to options to FOREX. My favorite part of the website and what played out in the next few weeks is very powerful reminder. Life is magic if you live and breathe what you do. On the website under Learn, you can see education course information. Ladies and gentlemen, I'm closing in the next few days and will reopen on May 8th. Anyone and everyone who is in the course receiving additional 2 weeks to study online modules while I will be gone. As you can listen with students on the website who trade anything and everything, from S&P to stocks to options to ETFs to Forex. What you trade is your choice. So, if you will decide to join us in the course, I highly encourage you. Review everything on the website, and if you sign up during my absence, however, I am teaching extremely important Fibonacci class this Friday. You will receive 2 additional weeks to review online modules. Course is 8 weeks when it comes to group sessions. Private mentoring is 16. When I work in private mentoring, I set up Ninja Trader for you. I set up your charts identical to mine. When you have access to private mentoring, we work via screen sharing and Skype. We work on your execution, which is not something I can do in group sessions. Key classes always Monday and Friday. Daily guided live trading. I meet with students in US and abroad all the time. That's what I do in Asia next week. That's what I did in California last week. That's what I did in New York before. Doctors, probably 20% of the course. Students from complete beginner to hedge fund trader. Is the reason I live and breathe what I do in US and abroad. Ladies and gentlemen, I look forward to your questions. And again, just a few more things. If you would like to come to YouTube channel, you can go back years and years witnessing the accuracy of the method in the live market. Browse back, going back years to see trades from our trading room and the accuracy of the method. All self-explanatory on the website. Never hesitate to contact me or ask me any questions. Phone number and email always posted on the website. So, if your screen is not updating, Clark, you have an issue with internet, as no one else is having that problem. Ladies and gentlemen, I look forward to your questions. A number of questions is posted opening up the charts. So please post the instrument of your choice, as that remains the key. Let me also remind you something extremely important. This is crucial day trading points of entry. This is trend Fibonacci levels. This is the levels you use before you ever acquire position on smaller time frames. And that remains the key. And that's crucial. So, first question I received is about Euro-Yen 5-minute chart. Let me explain to you something extremely important, which people do not realize about Forex. Basics of accounting and trading is crucial. I would highly encourage you to do basic math. Because if you do trade Forex, apples to apples, to futures, you understand. If you're trading euro standard lot, you're spending $20 to $30 per round trip. If you're trading euro-yen 5-minute chart and you're extremely ecstatic about your profits, I hope and pray you understand that if you would be trading yen futures, you would be spending $5 round trip, not 30 or 40. Never shocks to amaze me how little people know about accounting and trading. So, if you live in India or Bangladesh and you're trading standard lot size on euro-yen, it's not a problem. But if you're serious about trading Forex and you understand the expense of the most expensive market, you better be trading 4-hour and higher. Smallest chart you should be trading in Forex is hourly chart, unless you love paying $40 per round trip. Here is Euro-Yen 5-minute chart this morning. Knowing the instrument you trade, knowing the expense of the instrument you trade is a key. Did you short Euro-Yen this morning from reversal zone? Very, very important reminder. Never buy near. What a marvelous, marvelous reminder at the market open. What a fantastic fake out. The reversal zone is present, cannot enter into. That's simple. If you do, you're declaring to yourselves that you love trading with 15% success rate. And that's exactly the reason I named this level reversal zone. Long entry, not an option. And that's where sell-off had started. Let me show you why Euro-Yen finding a major pause and reminding you why this is not the place to short near. Euro-Yen ranging market. Picture perfect reminder. Never ever enter into reversal zone. Price comes to reversal zone. Expect reversal. What a dance, what a fluff. Knowing what not to enter into is a key. And that's what trend does every time. Every day. On any instrument, any time frame. Next question, gold 15-minute chart. Coming up. Every single instrument in trading has different expense ratios. Every single instrument, every single time frame traded differently by institutions. If you understand institutional bias, if you understand what institutions trade, if you understand what to trade, when to trade with institutions, never against them, your trading goes to an entirely different level. Here's gold 15-minute chart. Bullish trend is minor. This is where sell-off had started at lunchtime on gold. Reversal zone is not present, however, end of minor bullish trend is present. This level is always present, as we always have minor trend, we not always have major trend. In order for bullish trend to continue further, it has to break through this level. And let me remind you, as a day trader, what's extremely crucial to pay attention to. Institutional resistance. Powerful reminder. Never be tempted to acquire into reversal zone. Weekly chart is institutional chart, as institutions holding positions for months and years to come. As a day trader, you never buy into. And this example shows very clear correlation between different charts. Reversal zone on weekly. If you browse videos going back to 2016, you will see this level been present. And that's in a place this morning on gold. Why in the world is gold finding buyers if there is something random to this sequence? Nothing is random. Absolutely everything happens for a reason. That is absolutely crucial. This is where gold is now. Reached reversal zone. Bearish trend is major on gold. Sell-off reached reversal zone, showing you bearish trend is major when it comes to day trading. This is, however, remains a major obstacle. This is the key Fibonacci target you learn in the course. When price reaches this target and you choose to take long, you move your stop outside of break-even. You never ever ever ignore this as your target. And that's what price does every time. And here's a question about oil. As again, it was very fascinating oil news this morning. Oil came out with expected earnings, identical to what was expected, which hardly ever happens on oil. Take a look on this chart. As I keep saying, it's all about this support. This support is out, oil goes into free fall. Looks familiar? Where is oil right now? How long did oil respected this level? 1 minute chart was all about this support. Support is out, oil went into free fall. And this is where oil is now. Reminding you, never short near reversal zone. Way too late to short oil. As in fact, this is hourly chart. I simply convert to 1 minute chart. Chart present in the room since last week, when bullish news was extremely bullish. Did not mean a thing. You can find the video on the blog and YouTube channel. Oil right now in massive bearish correction. It was all about these support traders. Looks familiar? That was the key. This support is out, oil in free fall. And that's exactly what I'm telling you about euro. And that's exactly where Apple skyrocketed from, despite worst earnings on record. Next question, euro 1 hour. So, if you live in India, Bangladesh, or Indonesia, you can trade 5-minute euro standard lot. If you care about 1 cent, $1 earnings. If you understand that expense is giant in Forex and you cannot trade micro lots, you can only invest in Forex long term because it is the most expensive instrument in the markets. And this is where euro 1 hour is now. Reminding you, bullish rally doesn't mean a thing when it reaches this level. And that's where you start, and that remains the key. I had shown you S&P E-mini from hourly to weekly to monthly to daily charts. That was the key throughout the webinar, just a reminder. S&P E-mini chart from early this month from day trading room. ES hourly. Chart on ES from this morning. Looks familiar? Identical formula. As I had shown you also weekly, as I would like to show you on S&P E-mini future that has different abbreviation on different platform. My favorite event of 2016. Remember election night? Hedge fund convention and hedge funds bragging. They shorted the market because Trump won the election. Poor Soros shorting the market. Students and I know extremely well. The only wise thing to do is to enter long. Bullish rally reached crucial Fibonacci resistance. Looks familiar? This is what S&P is doing right now. Exact same reversal zone. In a play in March, in a play this week. As I kept warning everybody this morning, bullish rally overextended. Not a good place to be for day trader. Tomorrow, however, should be extremely interesting day on S&P. This level is a key. What price will do at this level on S&P is absolutely crucial. This is where buyers stepped in from multiple times, as this is the reversal zone. And that remains absolutely crucial. Institutional support, the key. We're expecting news only due to volatility. Fibonacci levels always far in advance, not after the news. This level been present in the room well before the election, months in advance. And this level present well before tomorrow market open, always in advance, never after the fact. And that's what price does every time. News, moving the markets. News, volatility. If news meant a thing and you bought oil, where would you be? Each and every day, each and every time, I show you these levels in advance. Respect news due to volatility. Expected oil volume this morning did not mean anything. And that's a key. As we already reviewed euro and pound, as we already reviewed oil and gold. Weekly sugar, fascinating question. No one in 6 years of doing this asked me about sugar. Let's see where sugar is. And if you can tell me the symbol, I will greatly appreciate it. Because frankly, sugar. Let's look for sugar. Ladies and gentlemen, you need to help me. Sugar. Not coming up. So if you give me the symbol, as no one in 6 years of doing this ever asked me about sugar. If you know the symbol, it may help the matter. Any other questions, pretty please do ask. If no other questions, ladies and gentlemen, you will be receiving Sugar Future SB. Thank you, Eric. Sugar Future. What chart, please, on Sugar Future? Weekly. Marvelous. Weekly is my favorite chart. You're trading weekly, you're trading one of the most spectacular charts ever. Here's weekly sugar coming up. So, here's weekly sugar, ladies and gentlemen. Here's weekly sugar, where sugar collapse had started from. I also will show you and remind you about Valiant, if you know what's shaking up the hedge fund world with Valiant. So here's sugar. Just to remind you what happened on sugar in 2014, and we'll take a sugar now. So only you know what you've been doing in 2014 with sugar. Just wanted to show you. Staggering reminder to never ever ever acquire position into reversal zone. Let's take a look what sugar is doing today in 2017, shall we? Why sugar been staging powerful bullish pullbacks? If there is more to the story. Is it possible that sugar reached reversal zone? That collapses over? And that's where bullish rally come from? So why is sugar right now in so much pain? This is exactly the reason why. Cannot buy randomly. Bullish rally on sugar in 2016 reached crucial Fibonacci resistance. Very powerful reminder. Random bullish entry is never an option. This is institutional resistance that reminding you. Bullish trend is minor. Exact same place where oil is now on weekly chart. Exact same place where oil had been in exact same place since 2016. The same place as sugar. Bullish news does not matter on oil. I have no idea what the news is on sugar. Never buy near this level. This level is always present because we always have minor trends. We not always have major trends. What is the crucial support to the downside? This support, this is your weekly channel, your institutional resistance, your institutional support on sugar. Sugar collapsing drastically lower levels, you know the rules, monitor for long point of entry. Short near reversal zone, not an option. And that's what price does every time. Every time I work with institutions, what do I listen to half the time? Problem getting in and getting out of position. You have institutional resistance in front of you. You do not buy near as day trader. Will never work. Crucial support on sugar. Will buyers be able to defend this support? That's the key. Do not short near this support. And that's what market does every time. Doesn't matter if it's S&P hourly. Doesn't matter if it's Apple. Doesn't matter if it's Tesla. Just to remind you, as I love to see when students accomplish success after a couple of weeks in the course, showing instantly that they can identify Fibonacci levels well before hedge fund managers. Do you remember what's been happening with top hedge funds in US? Have you been reading publications? Here we are. Aikman, Valiant. Aikman bought Valiant close to reversal zone. Aikman lost $4 billion, going through first $4 billion divorce. Can you imagine that? First $1 billion divorce. This is an old article, as Valiant collapsed 90%. As I was writing articles in 2015, when I learned that Aikman was a top shareholder of Valiant, buying Valiant at reversal zone. This is what I posted in 2015. This is what I said very clearly. Not the place or time to buy Valiant, as the only good thing was to do for Valiant to collapse. Valiant in free fall. As I said, Valiant heading to zero. Valiant had done exactly that. Not far off from zero. I'm actually surprised it didn't reach zero yet, as finally Aikman abandoned Valiant. So, if you know where reversal zone is, which beginner traders do in the course after a couple of weeks, you're better than top hedge fund manager in US. You would never be buying Valiant at reversal zone. This is where Valiant is now, at 9. That's the only thing that matters. Price action and Fibonacci. What you trade, absolutely up to you. Where would Aikman be if he knew Fibonacci? Where would Soros be night after election? you want to trade better than top hedge fund managers. Remove all the delayed indicators from your charts and pay attention to price only. We'll start in the course on May 8th. On May 8th and May 9th, you will also receive trading room invitation. So please monitor your inbox. Please monitor spam folder just in case so you don't miss any events. And if you would like to review the information on the website, pretty please. Before you contact me, as I'm still teaching this Friday, as I'm still teaching tomorrow, review all the information after learn. Review the videos and listen to the students. On the blog, you can read latest articles. On the blog, you can view latest videos, as well as YouTube channel. Thank you, traders. Thank you so much for your time. If you decide to join us, you will receive 2 additional weeks in the course. You can spend 2 additional weeks reviewing online modules. If not, I look forward to seeing you on May 8th. Again, I'm still teaching this Friday, April 21st. I'm meeting with students and hedge fund clients in Hong Kong. So thank you so much for your time. Look forward to seeing you in May. Have a marvelous, marvelous afternoon. My joy and pleasure. Ronnie, Mark, Don, Bert, Bill, Bruce, Conrad, Dan, Darren, Deborah, Diane, Eagle, Eric, George, Jen, Jeremy, Jerry, Joaquin, Joseph, Keith, Keen, Marek, Mark, Nick, Paul, Peter, Phil, B, Phil M, Roderick, marvelous, marvelous to see you, amazing to be with you, Ronnie, Sarah, and Toa. Ciao, kapao. Have a marvelous, marvelous few weeks. Look forward to seeing you when I'm back, or if you decide to join us, look forward to seeing you in class on Friday. Thank you, traders. Thank you so much. До свидания.